All right, so in this quick video, I'm going to be breaking down one of my favorite setups heading into this shortened week next week, and that ticker is XOP. And why do I love it? Well, there's a couple reasons why, but most of all, it is this beautiful ascending triangle pattern that we have going on the 4 hour. It's also visible on the daily, and I'm sure it's also visible on the hourly. I'm going to be breaking it down for everybody here on the 4 hour time frame. Notice the ascending triangle I have drawn. I have two different lines. We have the top resistance line of which makes the top of that triangle up here on this dashed line. And then first, I'm going to be going over the support line. So we have one touch here, two touches here. That's what gives us our trend line going up. It looks like based off of Friday's close, we get our third touch. Now, here is the problem with XOP right now. This is an ascending triangle. This is a bullish breakout. However, if you look at price action based on Friday, if you look at the EMAs, if you look at the stochastic slow, this is not a very bullish close on Friday. OPEC had some bad news, which I'm going to be going over here in a second. Right at close, Russia decided to kick the meeting, didn't want to agree to the terms they came to on Friday. Oil looks so good to go to the upside, and then boom, Russia pulls the rug out from everybody in the last 15 minutes or so, and basically every oil name in the market fades in the last few minutes of market open on Friday. OPEC, if I click here to OPEC, Google News right here, they will try again on Monday. However, peep this CNN article right here. OPEC drama raises the specter of even higher gas prices. This right here is what you want to see. Even higher gas prices. That is bullish for every oil name on the stock market. So we flip it back to XOP. Well, lo and behold, look what we have. We have an ascending triangle pattern. Here is our uptrend line right here, where the buyers continuously step in, depending on how Monday goes for OPEC, depending on what Russia does and any other oil nation. I know Mexico and UAE also made some headlines, but they seem to be much more cooperative than what Russia is doing right now. XOP, the buyers could easily step in and could gap us up again come Tuesday morning. Here's the kicker. An ascending triangle, remember, you want that to be a bullish breakout. Well, ascending triangles can also have a downside breakout. They can break to the downside. So short XOP below 96.01 as your safest. Below 96.01, it'll put price below the 55 EMA, and that means there's no technical support to the downside. If you short below 96.01, your first price target can be 94.72, and below that 93.43. However, I'm looking primarily at XOP to the upside. I do not want to short oil right now. In my opinion, tech and oil are the two sectors you do not want to short right now. I'm breaking down XOP, which is oil to a degree in this video. Here is my upside target. Go long on XOP with many first price targets to the upside, but here's the kicker. The biggest one of all is to get above 100. That is where we've seen 3 rejections from XOP in recent memory. The first rejection came on June 9th, which we see right here. Now we come back to recent price action history, June 28th, June 25th, heading into close. It looks like on a Friday before a weekend, we get a rejection, and then OPEC news. I remember this, June 28th, OPEC news hits the oil market right before open and dropped a whole lot of oil names, but that's okay because my team and I bought the dip a few days later. Now, on July 1st, we also get another push up to $100 for XOP, and we get rejected again. The sellers are very strong right here at $100 level. It looks like the third time's a charm. We're slowly climbing up this ascending triangle. Maybe the fourth time is going to be the charm when we break above $100, and then XOP can really start flying to the upside. But upside targets. We can go long above 97.46. That will be a risky entry. Risk averse entries will be long above 98.11. More risk averse will be 99.03. And if you really want to wait for confirmation to go long on XOP, wait for $100.20 to break. That is a hard resistance level to get over, going all the way back to June 9th. Also, just keep in mind, when you see this break above $100, you want to see volume. Ideally, you want to see a big volume like this, where we see XOP have a little gap and go play in store for us. We see volume come in here, and then look where the buyers step in and buy the dip for XOP. We also get some volume in there as well. Notice the low volume when they push $100. All right, so XOP back on June 9th. Notice the low volume. More recently, June 25th. notice the low volume. And then finally, on July 1st, notice the low volume. When XOP hits $100, the buyers are not there. We want to see volume come in. That tells me buyers are there, and XOP is set to see a solid breakout to the upside. Now, upside targets for XOP above $100.20. We get interesting. Looking at my fib levels, we have 101.69 as our first price target. That can probably be hit within 2 days. In my opinion, the way that this technical setup, this ascending triangle is looking for XOP, it looks like a solid 2 to 3 day run is in store once we break above $100.20. So first upside target above $100, 101.69. Second price target 102.47, and then finally my third and final price target, which is when I'll be closing out all my long positions for XOP, is 103.59. I think this move can easily be achieved in about a week's time for XOP. Expect maybe some pullback once we hit our first or second price target, but I do believe once XOP breaks $100.20, breaks out of this ascending triangle, XOP is going to print 103.59 in no more than 7 to 9 days, or excuse me, 7 to 9 trading days time. All right, so this is my favorite setup heading into the shortened week and into the next couple of weeks to come. If you have any questions for me, please leave them in the comments below. I'll be more than happy to answer them. And then please like and subscribe if you haven't already.